All right, at this point, please join me in welcoming our esteemed speaker, Dr. Sanjay Varshney, who is the principal and founder of Goldenstone.
Hey, good morning, everyone. How are you guys doing? Feeling good? Beautiful morning, right, in Folsom. Beautiful California. Hard to believe we just went through COVID, huh? A year of COVID, right, plus. Felt like an eternity, right? But looks like there's light at the end of the tunnel, right? So things are looking pretty nice now, shaping up. International travel should be starting soon. Much more aggressively, right, than what we are used to. So I'll share some comments about where we think we have been, where we are, and I think where we might go. And as part of the multiple hats I wear in my life, some of you are aware, I produced the Sacramento Business Review, which is the economic forecast for the region. Have been doing that for the last 13, 14 years, do that every 6 months. Just went to print. It goes out to about 8,000 businesses in the region through the Business Journal, right? So I have some new data that I can share with you as to how we look. Folsom obviously is doing great, right? But the region obviously has been a beneficiary of COVID in many ways, right? So I'm going to walk you guys through a few of these things, and hopefully the charts that I will share will show you a fairly good picture of where we are. Just to recap, you know, it's hard to believe where we were last year and how quickly things unraveled, right? I remember in January of 2020, when people asked me for my predictions for the rest of the year, I was very positive. I was very upbeat, optimistic. I said there's no recession on the radar. And lo and behold, the market crashed 38% in 16 days, the second fastest crash ever in my lifetime. Economy crashed, right, because of COVID, grinding halt. And then before we knew it, we were talking about the Great Depression era, which I used to basically sleep through when I was in grad school, because anybody who talked about the Great Depression, I would just yawn and say, hey, why are you talking about it? You know, I wasn't born then. I didn't live through that period. It's not relevant, right? But lo and behold, actually, 100 years later, you can see if you're superstitious, you can see that, hey, things do repeat themselves, right? So we went through hell. I mean, forgive my language, but we went through hell in terms of, especially if you're a small business, right? As to how to basically adapt, trying to come back to life or stay, alive. And thankfully, many of those predictions about the Great Depression era did not come true. So we did not really crash to the point where unemployment went up to 25%, like the Great Depression era, right? We hit 14.7, and from there, I think things are looking pretty good, right? How do you fast forward this? There you go. Why did we bounce back so quickly, right? I can pretty much sum it up in one word. Even somebody like me who is fairly bad at playing golf, if I throw enough money at the problem, it gets better, right? So if I buy nice clubs, right, nice equipment, I think I tend to play better, right? So we throw a lot of money at the problem, right? By my count, $14 trillion right now. That includes the infrastructure package we have on the table and the Green New Deal. For those of you who are wondering what 14 trillion means, that's basically half our economy, because the U.S. economy is about 24 trillion, right? So when you throw 14 trillion in just about a year's time and you give everybody free money, I think it helps, right? The last time in 2008, 2009, it took Congress 500 days to approve $797 billion. That was the total stimulus package we had. This time, 14 trillion. So again, I'm just trying to point out that, hey, by the way, if we are feeling pretty good, I mean, you should feel pretty good. I mean, if you didn't get any free money, there's something wrong with you. But what has changed is how we live, right? How we live our lives. Structurally, we have changed dramatically. Things will never be the same again, probably in my lifetime. We are still taking off our shoes at the airport, right? Because 9/11 changed travel forever. Same thing is going to be true for businesses. I think going forward, there are winners and losers. If you know how to adapt, you'll be on the winning side. If you don't know how to adapt, you won't. And so going forward, doing business is not going to be the same, and we just need to recognize that. And I think we will be fine. I think a few years from now, we'll look back and say, oh my God, I can't believe that we had such a rough time adapting to the COVID reality, right? But you can look at, for example, how we do medicine today, online shopping, right? Travel, education, tourism, restaurants, and I'm sure you can probably see the difference. If people are adapting, they do well. If the people are not adapting, they're not doing that well. Quick snapshot of how we have bounced back. So we sank last year. First quarter we sank. Second quarter we really sank, 32%. Third quarter we bounced back about 34%, right? We closed out the year minus 4% in the economic growth in this country, right? Right now we are back to pre-pandemic levels for the economy as a whole. Not different pockets of the country, but if I just looked at the economy as a whole in the United States, we are back to pre-pandemic levels, right? Markets have actually gone much higher. I'm a markets guy. I run a wealth management firm. I can tell you that when a lot of people panic and they just go onto the sidelines, they are probably missing out on the ride because they're not a good student of history. History has shown that every time the market crashes more than 30%, it bounces back even more very quickly, just like how we did in 2008, 2009. So right now, the markets are higher by more than 100% from the lows of last year, right? Corporate earnings are looking great, and you might say, well, how can corporate earnings look good if one-third of the economy is still not the same? We're still not back to where we used to be. But the winners are doing a lot better, and the losers, right, might actually still be struggling. But in aggregate, I think corporate earnings are looking fantastic. I'll share with some charts with you, but very quickly, we're actually higher than the pre-pandemic levels by almost 26%. So S&P 500 earnings are doing great. Unemployment is coming down. The supplement to the checks is ending this month, so obviously that's going to help. And the predictions are that we'll probably not go back to 3.5%, but pretty close to it very soon, because I think 10 million plus jobs available today, only 7 million people available to fill those jobs. So if you're in the business looking for labor, I'm sure you recognize that this is a very tough time to find skilled labor. In general, if I look at all the economic indicators, they're extremely positive. Everything seems to be working in the right direction. You can see, the Purchasing Managers Index, right, for manufacturing, for services, is humming really well at close to about 60. One concern that came in was inflation. For the last decade plus, we have been screaming and pleading for more inflation. Finally, we got it, right? Now we are worried we have it, right? So it's like human tendency to always worry. No matter what happens, you'll always be worried about something. 5.4%, I think, is the peak we saw for inflation. I think I tend to agree with the Fed. It's going to be transitory because the supply chain disruptions were huge. I mean, we have ships waiting in the port in LA, waiting to unload, and they cannot because there's not enough labor, right? So the disruptions are huge. When you order something through Costco online, they take your order, but then they don't fill it because they're not able to fill it that quickly, right? So I think eventually we will go back to the issue where we will struggle again to keep inflation above 2% because we have an aging planet. China is an aging population. United States is an aging population. Japan is an aging population. Europe is an aging population. The whole planet is aging, which puts a huge downward pressure on economic growth and inflation. So right now, I wouldn't be worried too much about inflation. Like I said, everything seems to be in the right direction. I just thought I would throw out some names, because if you're asking who the hell are the winners in this kind of a market, right? Well, there are a lot of companies that have done extremely well. These are companies that don't just basically go up 100%. In some cases, they've gone up 400%, 500%, 1,000%. So if you're not in these names, chances are probably if you're still holding AT&T or some of these other stocks, right, they're great dividend plays. But the whole thing is moved now. And I think going forward, you'll probably see more of that happening in the future, right? So again, nothing against AT&T stock because it's a great play. But if you're just asking, by the way, who were the COVID winners last year, This is a very quick short list, and they're mostly technology names. Last year was a great year in the market, right? S&P was up 26, NASDAQ was up about 45. This year, once again, it's up again. I mean, all across the board. Markets up close to 20% across the board. 2 days ago, we took a little dip, thinking that, my God, markets may not be doing well, but they're back again, right? You might ask, what's feeding the market, right? I can go on for hours on that one, but two quick things. Extra liquidity. 14 trillion is going to find its way back into the market somewhere, right? Number one. Number two, 10 years ago, more than 10,000 publicly traded stocks were available to you to invest in the United States. Today, we are down to about 3,700. So we have more people, more money, chasing fewer companies and fewer stocks. So there's a reason why the winners seem to be winning even more, because how can you not be, for example, in Microsoft or some of these other companies like Apple and Google, because they are the ones that instill confidence in people as far as safety goes, if you're trying to invest in the stock market, right? But in general, corporate earnings are doing great. They're up. This is a chart that shows you 5 companies are almost 25% of the S&P 500. So, and these 5 companies are larger than most economies of the world. Apple is almost as large as the entire economy of India. So if you're asking what does financial strength mean, there's a reason why the U.S. economy is humming, right, and is doing really well. So just fast forward real quickly in the interest of time. I thought I would share some charts on the local economy, right? So I joke about it, but I mean it very seriously and sincerely. 17 years is where I've been in this region, El Dorado Hills, right? I don't think there's a better place for me to move to, because this is a great place to be, raise a family, right? We get negative on California pretty often. We get negative on the region pretty often. If you have watched my speeches in the past, I've always complained about how we are not a very diversified economy, right? But I think on the flip side, this is a great place to be, right? And this round, we were an accidental beneficiary of COVID. Because when we saw these companies in the Bay Area say, hey, by the way, you can work from anywhere, you can work from home, we saw more than 20,000 households by our count that moved here. And they're still moving here, right? In my neighborhood, if I see homes selling for $200,000 above list price, that gets my attention. I'm saying, wow, how did that happen, right? Because my neighborhood was not that active, right? So you can see things are moving here for Sacramento. It's in the limelight. We are making headlines nationally in the Wall Street Journal that, hey, we are the top real estate market for the country, both for rental and for housing. So those are all good things, right? And yes, we can finally say, hey, by the way, our standard of living and everything else is much more attractive than in the Bay Area. There's a reason why Bay Area people are moving here, right? Very quickly, like I said, I want to show you some charts. The labor market worries me a little bit, right? So you look at the average weekly earnings increase for 1 year, 3 years, and 5 years, and look at the median home price increase for 1 year, 3 year, 5 years. There is something called loss of affordability. At some point in time, our own people will not be able to afford our own homes. Why? Because when the Bay Area people come here and offer $200,000 more than the list price, and in many cases pay cash for some of these homes, that's going to have an impact on our own people who basically don't have the same income. Intel, SMUD, they can only offer that much, right? They're not going to give you a 25% raise overnight to basically compensate you for the housing increase in prices, right? So this is a challenge. I think going forward, we will see some of these. Same thing as Austin, Texas. I can tell you that Austin, Texas has changed too dramatically with all the Californians moving there. And now suddenly things are not affordable in Austin, Texas, right? Small business in the region is humming. So they've come back. The small business confidence is coming back. Clearly, they were not hurting in terms of the loans, because with all the PPP money and everything else going out, the SBA lending has expanded over the past year. Consumer sentiment is coming back, although we trail the national averages. So the consumer sentiment in Sacramento is still a little subdued compared to what's happening nationally. And I can understand that, because Sacramento, before COVID hit, was not exactly the most humming economy nationally when you start comparing to some of these other job centers in the country, right, that are attracting many more people for job purposes, right? We are a great place to raise a family. I keep telling people we are a great population center. We are not the best employment center because I can't count more than 25 companies in Sacramento that have more than 1,000 employees. And if you say, why does that matter? It matters because in this last COVID crisis, large companies, mid-sized companies had a much better ability to absorb economic shocks. They were able to allow their employees to work from home, not come back to work at all, still get their paycheck, still get their raises and get their bonuses. Small businesses could not do that. And that's where I think Sacramento is a little different because we have only 20 or less or fewer companies that we call large, more than 1,000 employees, right? Types of credit plan, I think the consumer is still very strong. Why shouldn't the consumer be very strong? We have the highest personal savings rate in the last couple of decades right now. We have a lot of people who could not spend their money on anything. So now they're spending it on homes. They couldn't go to travel, right? They couldn't go to the restaurants. So the personal savings are finding their way through Robinhood accounts also into the market, right? Into cryptos and something else, right? So it's an interesting phenomena in the markets. The millennials are participating in the markets. That's a great thing, but they can also hurt because when you start basically seeing GameStop go up 1,000%, it's hard to justify those valuations, right? The median home price has gone up, no surprise. The average price per square foot has gone up in the region, no surprise. But the affordability has gone down. So to afford a house, you need a median household income of $85,000 today to afford the median home in Sacramento, right? And I'm not sure if there are too many households that are basically above that limit. This chart gets my attention. If you're asking what kind of homes are selling, 75% of the homes that sold last year were under $600,000 in price. So again, Sacramento is not the mecca for 1 million plus kind of homes. This is the place where I think, reasonable households with reasonable income, right, are looking for a good living. And so that's where the market is. Office market has been very stable. In spite of predictions that our office market is going to crash, downtown especially, it hasn't crashed. You can see that we are okay so far. Now, commercial real estate takes some time to show up in the data, right? So I won't be surprised 6 months to a year from now, you will start seeing stresses come out in commercial real estate because that's fairly typical. Industrial is doing great. I'm sure other people will tell you that we don't have enough industrial capacity or supply in the Sacramento region for new companies or industrial warehouses and so forth. Retail has not taken the hit I thought it's going to take. I thought you'll see a lot more damage to the strip malls and to the retail space in Sacramento region. So far, it's holding up pretty good. In fact, we look much better today compared to just 4 or 5 years ago. So things are still okay. And finally, we also look at what are the most recent human capital trends. So we ask companies, what's on your mind? What's the highest priority for you guys, right? So you can see recruitment and selection is a top priority. Retention is a top priority. Closing the skills gap is a top priority. And then you can see the list goes on and on and on. But you can see the skills gap is critical. In the last crisis, we saw a mass exodus of the male from the construction industry. And that population didn't come back in the same numbers, right? Construction has done well in this last round. Clearly, it has been a bright spot. Healthcare has been a bright spot for Sacramento, right? But again, we're all competing for skilled labor, and I think that's going to probably stay true going forward. In general, while the U.S. economy has come back to pre-pandemic levels, the Sacramento economy has not come back to pre-pandemic levels. So if you look at this chart, it shows you the drop, shows you the increase again from the drop. But again, like I said, if we haven't gone back to where we used to be pre-pandemic. Regional banks are doing great, unlike 2008, 2009, when the banks were under pressure because many of their loan portfolios were linked to real estate, right? Right now, at least, our banks are very healthy, and they seem to be doing a great job in the region. In general, if you ask me, where does the future belong, given that COVID has changed our world so dramatically? And I remind people that it's not a static world. It's going to keep evolving and keep changing, and the future is going to be much more dramatic than the last 10 years. If you're asking me where the money is going to be made in the next 10 years, here's my chart right here for you. It's going to be in robotics and artificial intelligence, cybersecurity, fintech. If you look at the demographics and social change kind of company with genomics, look at infrastructure, mega cities, smart cities, right? Climate change and companies associated with climate change, like clean energy, right? Electric vehicles, self-driving cars. And then, of course, don't forget that while the U.S. is losing a fair share of the world's economic power, at one time we used to be 50% of the economy in the world. Today we are down to about 15%, 1/5 of the world's economy. So if you're asking where does the future belong, I can tell you it belongs to India and China, because they have 1 billion people who are considered to be middle class, who can afford all the things we afford in this country, like a refrigerator and a car and a television and all those things. So they have the consumer power, and that's 1 billion people, right? So I think the future will probably be, if you drew a circle around India and China, half the world's population lives there, and it's no surprise that the consumer from that part of the world is going to drive some of these trends, I think, in the future. So with that, I guess I'm going to stop here, right? Thank you very much for having me as a speaker, and wish you guys a wonderful rest of your morning, right? And this is a beautiful place to be. Thank you again.